Hey guys, my name's Jose, and this is another episode of Buy or Pass. In this series, I will look at the financial documents of a company and decide if I was looking for another investment, would I buy or would I pass? Before we start, don't forget to hit that subscribe button to get info on new episodes and other videos. So let's begin. On today's episode of Buy or Pass, we're going to take a look at eBay. They just reported their Q4 2018 a few weeks ago. All the information was collected. Their 10K report was from their investors website, and then we'll take a look at lazyfa.com. A quick breakdown of the episode. First, we'll begin by looking at some information that I collected from the 10K report. Then we'll look at LazyFA to have a better understanding of the current financial numbers. So we'll start by looking at some yearly highlights. The first thing is net revenue increased by 8%, and it was primarily driven by marketplace, net transaction revenues, and classified marketing services and other revenues. In a bit in the episode, we'll take a look at how the revenues are broken down. Second, they had operating margin decrease to 20.7% compared to 22.8% last year. That's about a 2% drop, pretty big drop in my opinion. In the third quarter of 2018, they sold investment in Flipkart. They received the proceed of $1 billion. Generate cash flow from continuing operating activities decreased from $3.1 billion last year to $2.7 billion this year. Again, another drop, and we can see that's probably due to that operating margin decrease. The end of the year, they ended with cash and cash equivalents and non-equity investments of about $8.6 billion. In the fourth quarter of 2018, they completed analysis on how the tax reform changed. Even though it's been a year late, they realized that they've recognized an additional 463 million reduction to what they previously recorded. So that's again good for them, but I'm surprised it took them that long. Diluted earnings per share from continuing operations for 2018 was $2.55 compared to diluted loss per share of 95 cents last year of 2019. So that's actually a pretty big increase. In January of 2019, Board of Directors did a quarterly cash dividend of 14 cents per share of common stock to be paid around March 20th, 2019 for shareholders recorded of March 1st, 2019. So that actually dividend ended. Yep, that's been some time. All right, so next let's talk about share buyback. During the 3 months ended of December 31st, 2018, they repurchased approximately $1.5 billion of stock from the repurchase program. We can see here on October 31st, they started off with $4.6 billion to use for 2018. Right now, they ended 2018 with $3.1 billion. So as of December 31st, 2018, they still have close to $3.2 billion remaining to buy back stocks. This has no expiration. And now in 2019, in January 2019, the board authorized an additional $4 billion. So in reality, this company has about $7.2 billion to spend on stock buyback. And again, with the tax reform, this is actually something we're seeing pretty often with companies, that they're buying back their stock and they're buying heavy. So right now they have $7.2 billion to buy back their shares. Just to see, their average price per share was 28.96. We'll take a look at what the current price is right now to see how much that's changed. Here we talk about revenue by type and location. Here we can see revenue, they've divided it by net transactions. So this is what, if you use eBay, right, they have other websites like that, StubHub, but they collect a revenue, they collect some form of payment when a product is sold. So this is the net transaction revenues from the marketplace. It increased from last year by 9%. From StubHub, it increased by 6%. And total net transaction revenues increased by 8%. Last year was $7.8 billion. This year was $8.5 billion. So a nice healthy increase. Then marketing services and other revenues, we can see an increase in marketplace and also a big increase in classified. But there was a decrease in StubHub's corporate and others. But we can see this is a very small number, right? From 15 million to last year was 18 million to 15 million. But if we look at the other products are in the $1 billion. So this decrease of 17% is not a huge deal. Total net revenue for marketing services increased by 7%. So everything total net has increased by a healthy high single digits. Total net revenues increased by 8%, like I mentioned in the previous slide. That last year was 9.9 billion. This year was 10.7 billion, an 8% increase. Then we can see net revenue by location. Great thing to see is US and internationals both had an increase in revenue. US a little slower at 4%, low single digits, where international increased by 11%, so in the double digits range. Total net revenue again increased by 8%, and we saw that already. Next, we have a debt timeline. So we just wanted to see what in the next 5 years, how much they have to pay. For this year, 2019, it's one of their highest years compared to what we see for 2000 up to 2023. So right now they have 2.18, almost $2.2 billion to pay by the end of 2019, and a huge portion of that is that it has to pay $1.8 billion. Leases and purchase obligations are nowhere near. Total is about 340 million compared to the $1.8 billion of that. The next year, 2020, it's a lot lower at $1.5 billion, and we can see that mainly has to do with about $600 million less to pay in debt. One thing to know is debt payments are pretty heavy in 2019 and 2020. We can in 2022, not 2020. In 2019, it has 1.8 in debt, which equals to a total of 2.1, including leases and purchases. In 2022, it has total debt of 1.9, even higher than 2019, and it has total obligations of 2.12 billion. And these 2 years, 2019 and 2022, are the only years from 19 to 23 which have over 2.1 billion of obligations to pay. The other years are below 1.5 billion. So in 2019 and 2020, it's a huge jump, almost 40 to 80% increase compared to some of the other upcoming years. We can see 1 year they have to pay almost as low as 1.2 billion, and right compared to 2.1 billion, that's almost an 80% increase. So once we take a look at the assets to see how if this company definitely has cash to pay its debt. Then this is a quick business transaction. In the second quarter of 2019, they completed an acquisition with Geosis, which is a Japanese business, in exchange for $306 million in cash. This will allow them to increase Japanese consumers' access to more inventory and also grow their international presence. So we'll see throughout the next few quarters how this platform has helped out. In the third quarter of 2019, they sold, like mentioned, they sold their investment in Flipkart and collected $1 billion. In the fourth quarter of 2018, they announced their intentions to acquire UK-based classified site Motors.com UK, and they believe this acquisition again will increase their international presence and give buyer access to more listings. They expect to close this transaction in the first half of 2019. They have yet to close any prices related in the 10K report. But we can see this company is definitely trying to go in the international aspect, and we can see why, right? If we look at revenue by type locations, in the US it was a low single digit increase in revenue, where international they saw a double digit increase. So they're going international to try to increase their revenue there, where they can increase it into double digits. Now it's time to take a look at lacyfa.com. All right, guys, so here we're on lacyfa.com, which allows us to look at all these financial numbers in an easy visual format. And like I mentioned, today we're taking a look at eBay, right? We just looked at the PowerPoint presentation. And first thing we wanted to take a look at was the price of eBay at the moment. So right now it's $36.44. We saw from our PowerPoint presentation that they paid about $28, I think. So they've definitely made a nice 30-40% increase at their average price paid. So here on Lacy FA, we're going to take a look at the income statement, balance sheet, cash flow, and some metrics. We're going to take again a look at the annual data since they just reported their quarter 4 2018 and they just did their 10K report. So we'll take a look at everything in the annual data. So here over the years since 2014, we can see 2014, 2015, actually since 2013, we can see this healthy increase in revenue. 2013, this company had $8.26 billion of revenue, and now it has 10.75. So a nice healthy increase. Last year was 9.93. Again, this year's 10.75. And like we saw on the highlights, it was an increase of about 8%. Cost of revenue has also been increasing. This year was 2.38 billion. Last year was 2.2 billion. But good thing, we see revenue is increasing at a higher numerical rate compared to cost of revenue, and for that reason we have a positive gross profit. Gross profit this year was 8.36 billion compared to last year of 7.71 billion dollars. Again, a nice healthy increase since 2015. Earnings before income tax, we can see here that they had a great year in 2016. There might have been some one-time transactions here, but it is higher than 2017. 2017 earnings before income tax was 2.27 billion. This time was 2.72 billion. And now with the taxes, they could have a positive net income this year of $2.53 billion compared to last year of $1.02 billion. And if we take a look at earnings per share, this year earnings per basic share is about $2.58, where last year was negative 95 cents, almost $1 less. So here we're going to take a look at what we just saw in just a different way, the income statement. Lacy FA gives us some red flags that we might take a look at. The major metrics right here, nothing really much to mention, but here we can see revenue and cost of revenue. We can see how revenue outweighs cost of revenue, and that's why we see that huge amount of profit and of gross margin at the moment. Revenue versus cost of growth percentage wise is almost a 1-to-1 ratio. There's no outliers here that would tell me that this company is doing something fishy. Next here, gross margin. So gross margin has been pretty stable at around its 77% Last year was 77.6. This year was 77.8. Its profit margin does seem to shift around over time, and it's actually been jumping too much for me that right now I'm not pretty happy with what I see on eBay. Right, we can see profit margins last year was pretty low. The year before that was extremely high. The year before that was 20%. This year's 23.5%. Another year was 34%. So this is definitely all over the place, where their gross margin is definitely pretty constant throughout time. There's no real red flags right now shooting at us from Lacy FA, so that's not a bad thing. And next, we'll take a look at their balance sheet. So in the balance sheet here, we have the assets. Assets in 2014, they had huge assets, drop down in 2015 from $45 billion to $17.75 billion. And it's had some form of increase throughout the past 3 years, and then last year it did decrease. and we'll take a look where that decrease happens. But we can see total assets, and I can see where it definitely happened. It's most likely here in receivables. The way they were counting receivables probably changed, and that's why we see a big change here, and in payables as well. So total assets this year was $22.82 billion. Last year was 25.9, almost $26 billion. A nice, it's definitely a decrease of about 25, almost $3 billion. Then we'll take a look at total liabilities. This year was 16.54. Last year was 17.94. A decrease of a little bit over $1 billion. But we can see total assets is decreasing numerically at a faster rate compared to liabilities. And here we can see total debt. Total debt, even though it gets paid off, it does have this uptrend happening, which to me is not a great thing. And we can see here total debt is $9.23 billion for 2018. That's over 50% of the total liabilities. Cash and cash equivalents again decreased in 12. It's been going down. It's pretty flat line. This year was $2.2 billion in cash and cash equivalents. Last year was $2.112 billion. Not a big increase either. Next, we'll take a look here again at the same balance sheet. We can see assets and liabilities. In the early 2000s, we can see the assets outweigh liabilities, but now we can see liabilities are closing its range to the assets, and we can definitely see it in shareholder equity, which is the difference between the two, but we can see this downtrend going on in shareholder equity. Next, we'll take a look here at the asset distributions and liability distribution. This just gives us a quick breakdown of how the assets and again this liability are broken down. We can see a huge portions of the liability, 60.37% is non-current debt and 12% is current debt. So that means about 72% of the liabilities are based on debt only. The other portions are not big enough. Tax liabilities are about 23.9%, a huge portion, and it's definitely something to take a look at. Next, we have the asset distributions. The big players here are intangibles at 24%, 5.25. We have cash and cash equivalents at 10%. We have non-current investments at 18%, current investments at 12%. Again, this company does seem like it has cash, obviously, to pay for its current debt, but in my opinion, everything is looking pretty tight. Here we can see current ratio. We have some flags that Lazy FA has given us. First is current ratio deterioration, and this is just telling us that the ratio between assets and liabilities is shrinking. Back then, assets were much higher. Now it's almost a 1-to-1 ratio. It's about 1.6 assets compared to liabilities, and we can see that ratio is decreasing. Eventually, it does look like we're going to hit that 1.0 ratio. And here we can see why. We can see that total assets are growing at a lower pace compared to total liabilities, and that's why we see again that total ratio decreasing over time. Next, we'll take a look at the cash flow statement. Here in the cash flow statement, let's see if we can click it. We can see again net cash flow from operation decreasing. I'm really not liking what I see in eBay right now. Metrics, so cash flow metrics, price to earning ratio pretty low, debt to equity ratio increasing, so that means that is getting higher compared to its equity. Again, not a great thing to see. Free cash flow going down, current ratio going to that 1. That means assets and assets and liabilities are almost to a 1-to-1 ratio. And we can see profit margins all over the place, and if we compare it to the average, this year's is probably a little bit below the current average. So let's take a quick overview. Income statement, right? Income statement, we see revenue increasing at a healthy pace, cost of revenue increasing, gross profit increasing as well. On the result, we have a positive net income, but this to me is pretty scary, right? It's been pretty flip floppy for eBay, right? We have 14 almost no net income, 15 increase in net income, 16 a huge jump in net income, followed by 17 a huge decrease in net income, and now to 18 an increase of net income. And we can see this earnings per basic share all over the place. Then we can take a look right in gross margins. We can see profit margins are obviously what correlate with the net income, but we can see it again all over the places. While its gross margin is pretty much on the dot with its average. Next, another review. We'll take a look at balance sheet. Balance sheet. I don't like the balance sheet because such a huge portion of its liabilities is debt. We saw 72% of the debt is are 72% of the liabilities are debt. We can see assets decreasing at a faster rate compared to total liabilities decreasing, and we have that current ratio closing up close to that 1 to 1.0 ratio when it used to be over 2.0%. Cash and cash equivalents again increase compared to last year and a few years, but that it's not enough, and I do think money might be tight. Cash flow from operations, we see this decrease over time, and again, to me, based on all this, eBay will definitely be a pass, and if I was looking for another investment, I would not purchase eBay at the moment. So I hope you guys enjoyed the episode. Like I mentioned, Lazy FA makes it so easy to look at all the information, which makes these episodes go pretty fast. I hope you guys enjoyed the information we collected from the 10K report. It's always good to take a look at them, but those pages can be over 100, those files can be over 100 pages long, so it definitely takes some time to take a look at them. Again, don't forget to subscribe if you guys enjoyed the information to get updates on new videos. And check out my website, josenajarro.com. All the information I post there is free. Again, guys, what would you do? Would you buy or pass on eBay? Definitely post it on the comments below so we can get a discussion going on. And again, see you guys next time and have a good night.